So today's workshop is basically designed for system trading. We will be discussing about the performance on system trading, how effective the system trading can be. The strategy is called opening range breakout. So what is this exactly? Just look at this particular chart. We are seeing the Bank Nifty is currently trading around 39,900 level. So in this, you can see when you look at this particular chart, there is a time frame. We have 30 minutes, 5 minutes, 15 minutes, the different times of time frames available. But I'll go for two time frames. One is 5 minutes and another is 30 minutes, right? So you can see this is a 30 minutes time frame and this is a 5 minutes time frame, right? So what is the difference between these two chart is, so this is a very basic analysis, right? For every 5 minutes, the candle is being formed in the 5 minutes time frame. In this, for every 30 minutes, the candle is being formed. This is the basic difference between the two different time frames. But what actually is the strategy what we are going to trade? The strategy is very simple. We just have to mark the high and low of first 30 minutes, or it could be for first 5 minutes, right? I'm just sharing you simple examples. So let's say this is a 30 minutes time frame of Bank Nifty, and this is a low. The low of this candle is 40,077. The high of this candle is 40,350. Right. So if let's say if the Bank Nifty breaks the low here, we will buy put option. We will buy put option. But let's say if the Bank Nifty breaks the upward direction, right? For the after the first 15 minutes or first 30 minutes candle, then we will buy call option. If it breaks upside, we will buy call option. If it breaks downside, we will buy put option. As simple as it is. So this is called as opening range breakout strategy, right? So why am I telling you the simple strategy? Because you'll be surprised to see what is the performance of this strategy. It's a very simple strategy. A lot of people think that learning a lot of skills, especially in intraday, you need to look at multiple data points. You need to look at you need to have an expensive software, so you need to be very good in execution. A lot of people also think that you need to have a very big capital to make money, but I'll be showing you with a less capital how to scale your capital using this simple strategy. I'll be showing you in the coming slides. So in this example, we'll not go for 1 minute, or we'll not go for 15 minutes, or we'll not even go for 10 minutes. We will go for bigger time frames. So why we'll go for bigger time frame is the higher the time frame, higher will be the accuracy of the strategy. If you go back and see for every single day what has happened in the market, you can go back, let's say, for the last 5 years or 10 years and see this simple rules has having good accuracy rate. So I'll be sharing you a simple database so that you can be able to get confident how the simple strategy can work effective. So in backtesting, what we do is we look at two parameters. One is it is called as equity curve. This is called as equity curve, means what is your P&L, net P&L. Second is the drawdown. There are two parameters which is very essential in building a system. Whether you trade for option buying, option selling, whether you go for scalping, whether you go for weekly strategies, whether you go for long-term strategies, every strategy you need to look for two parameters. One is equity curve, means what is the profit, compounded profit. Second is drawdown, what is your maximum loss. So in this particular backtesting, we have used this condition. First 30 minutes range breakout, and we have kept 10% of the premium and 30% is the target, right? So in this example, we have taken 1:3 risk to reward. Like you can see in this particular example, we have taken 1:3. That means even if you are just making 26%, even if our strategy is working 3 times out of 10 times, still we can make money in this strategy. This is what the backtest is telling us. You can just closely look at these numbers. So let's say we are taken this example with starting with 1 lakh rupees capital. We are just, you can see the returns here, net profit for last 20 years from 2000 to till date. It has given close to 577% for a capital of 1 lakh. But if you look at the capital risk adjusted return, in this for 1 lakh, we are not utilizing the entire capital. So you can see in 20 years, your capital has gone up to 4,000 return. So with this simple strategy, you can see how much amount of scale you can have just by following simple strategy. Even Nifty would have not given this kind of return, right? Even if you are invested in Nifty, it would have not given this kind of return. But with this simple strategy, it has given more than 4,000 returns for the last 20 years, right? This is about the returns. Let's understand what is a loss, right? For this, if you go back and see the drawdown here, the drawdown here is, you can see the maximum drawdown which you had in this particular strategy is close to -9% of your capital. You can see this database, right? it has went up to 9%. Means, let's say you are starting with 1 lakh, maybe 10,000, 20,000 of your capital has gone at one point of time, but still you're making money, right? You started with 1 lakh, now you're sitting with more than 5 lakhs. But let's say if you just started with, you're utilizing your entire capital, right? You're utilizing, why we're going with 1 lakh, because we want to keep some buffer amount. Let's say if you lose 20, 30,000, we still be able to trade into this game. Because of this, we are keeping 1 lakh rupees capital. So you can see this is how your profit will be. You're just trading one single strategy for every single year. This is for 20 years. Why am I showing you this? Because this is giving me confidence that, okay, if I trade this, I can make money. You can see it is always going up. I made 500% return with 1 lakh, but risk adjusted return is 4,000% return. So if you calculate, you would have scaled your capital to such a big level just by following simple rules. You're not looking at open interest, you're not looking at anything, right? So now let's look at our performance in this particular game, right? Because we are using the same strategy for intraday, and we are using the same time frame. We are using 30 minutes time frame. And you can see, let me just show you the performance from November 1st to till date. So we started with 50,000 just with two lots, because a lot of people in our community are starting out new. So in this example, with 50,000 rupees capital, we are almost doubled in 4 months. You can see the return here. Let me just show you the chart. So in this game, what happened is, you can see from November we made 3,000 with two lots. The profitable trade we made 3,900 rupees. Then the second trade was also profitable. We started making money. We made profits here. We made up to 20,000 rupees profit, and then we started losing. We lost almost 10,000 rupees. Sorry, you can see we made 20,000 rupees profit, and it came back to 8,000 rupees. So in this case, you can say this is called as drawdown. All right. I hope you're able to follow me. So you can see, so you made 20,000 rupees with 50,000 rupees capital within a week. You almost made 50% return. But options buying, why a lot of people fail, because they will not be able to handle this drawdown. Because in rule based trading system, what happens is you need to follow the rules. If it is stop loss, stop loss. If it is profit, profit. You don't have to change the rules, right? This is where a lot of people go wrong. So then what happened is, we again made profit. It was stable. You can see for the entire month we just made 15,000 rupees. Then it compounded. You can see in the month of November we made up to 19,000 rupees profit. In the month of January we made 26,000. It's getting compounded here. So we started with 50,000 rupees capital. It is getting compounded here. Every single day we are making profits, making loss. You can see we made up to 80,000 rupees profit. Sorry, 30,000 rupees profit within a matter of 2 months. Then we had a drawdown, right? We lost up to 20,000. You can see 10,000 rupees has been lost. So that is 10% of your capital. That is what this backtest is telling you. This backtest is telling you the maximum drawdown you can go is up to 9 to 10%, right? This data is exactly matching the performance what we're doing. This is called rule based trading system, and this is what you need to understand in building a system. And then you can see once the drawdown is hit, then again we recovered, because we're following the same rules. And we are doing this using algorithm. We are not doing manually, because we have built system based on this. I'll be showing you this. Then you can see it went up. In the month of January we had hit up to 50,000 rupees. You can see with 50,000 rupees we made 50,000 rupees. We almost double the capital. And the month of February, you can see we made up 58,000. Then we had a drawdown, and it's stagnant. So we made up to 60,000 rupees. Then we lost. Then now currently we are sitting with a profit of around 1.2 lakh. You can see this is what is called system trading. I'm just showing you in in the form of graph, because I wanted to understand this simple logic. If you see someone is making profit, you will be having a lot of confusions how someone can make money in this game, right? It happens because a lot of you are at the first stage of your trading game. You're not gone in the second level, second stage or third stage. There are different stages in trading. First stage is you're losing your capital every single day. Second stage is you're breaking even, you're making profit, you're making loss. Third stage is you become profitable, right? We have explained in our training program also. Let's say if you go to trade psychology, we have explained in depth about that, how psychology can be, how we can become profitable, right? I'm just showcasing you what is a journey of a trader, right? You are getting a lot of this, like overconfidence, greed. You're having FOMO, anxiety. Because of this, 90% are in this particular trap. They're not able to break even in this game. So this is what it separates the 1% of the people in this game. And you can see with 50,000 rupees, we are showcased that we can double a capital in 4 to 5 months. So this is how you scale your capital. And even we do have a lot of community members in this community. I'll be showing you that a lot of people are almost getting the same results because they're using this systematic based approach. Because this strategy, whatever I shared you, right, it has to be followed systematically. So you may think why to automate intraday? Because a lot of people think that algorithmic trading is complex and I don't have system, I don't have technology. It's very simple. And a lot of people think that I can do watch the screen, I can trade. Why I should use algorithm, right? So one of the reason is your time is more valuable than money. Let's say if you are trading for intraday, let's say if you're working professional, if you put the same amount in your job or business, you will earn more, right? Because intraday trading is random, right? Market can go up, it can go down, it can consolidate, but we are trying to trade because of the excitement what we have. We are trying to get into the market because of the excitement. But you can automate this using algorithm that will save you a lot of your time. And in the coming days, the trading market hours is going to be longer, right? Then you'll be losing your entire time in trading. It will be very stressful for you. If you're, let's say, if you're a working professional, you will lose your health, right? Second thing is you don't have to time the market because this is automated approach, which is rule based approach, which will be done using API based execution. And the third thing is you don't have to time the market. The algorithm will be watching the levels, right? It's a very simple strategy. And the most important thing here is even if you're a beginner, even if you're an experienced trader, even if you're a working professional, you can automate this simple strategy. This is the power of system trading, right? Even if you're tired, the algorithm will not be tired because this is designed with so much of complexity where you can trade Nifty, Bank Nifty. We have kept a lot of flexibilities. You can test multiple strategies. This strategy, which I showed you, is a very simple and a basic strategy. With this strategy, also we have made money. There are so many strategies which is based on you can do at a time Nifty, Bank Nifty combined. You can do different time frames. You can go for 5 minutes, 15 minutes. You can go for breakout revert. There are so many concepts which is available into this particular algorithm. So here we are doing a live demonstration for Bank Nifty. So you can observe we have given a conditions that we want to take a trade if the Bank Nifty breaks the first 5 minutes high or low, right? So if you look at the candlesticks now, the Bank Nifty had a red candle in the first 5 minutes. So now we are seeing the green candle is being formed, but the low is not taken out. So still the algo is monitoring for the entry signal. So I want you to observe this demonstration closely so that you can learn how emotions can be taken out while trading intraday. So you can observe the Bank Nifty is trying to break the low of the day. So I can see as soon as the low is broken, the algo automatically has bought the put option because it has broken the low of the day. So it has bought 43,100 put. So you can see the price it has bought is 210. So now the stop loss order is being trailed and being monitored by the algorithm. The main thing you can observe from this particular trade is when you're trading manually, you often tend to modify the stop loss or modify the target, or we try to break the rules what we have planned earlier. But through algorithm, we can follow it systematically and the emotions will be taken out by the system. So this is the power of system trading or algo trading. So you can observe here, the Bank Nifty is trying to break the low, but there is some pullback which is happening. So even though you are seeing the premium of the put option is going up, but we have a stop loss which is already placed in the system, right? And also the target is also being monitored by the algorithm. So just observe this particular trade for a few minutes because you need to understand what happens while you're trading or while you're seeing the MTM fluctuations in the market. So now let's say the Bank Nifty is now reversed, right? So you can see now the Bank Nifty is consolidating and you are seeing a big red candle in your position. So most of the people will just exit this particular trade because you're seeing a loss in the trade. But as a system trader, the stop loss is already being placed in the system. You have to just observe and wait either the stop loss or target is being triggered. As simple as it is, right? So just observe this now. Now what will happen is you can see even though we had a red candle, but the Bank Nifty is going in the downside direction, right? So you can see the premium is fluctuating, but still it is going in our favor, right? So there are two conditions algorithm is monitoring. One is it is monitoring the stop loss, and the second is it is monitoring the target value also. So you can see now, as soon as the Bank Nifty breaks down, or if the premium approaches near the target, the stop loss will be modified and the target order will be placed automatically. It's completely automated, right? So you can see now the Bank Nifty is trying to break, but it is facing some consolidation. So the premium is getting decayed. So it is consolidating or hovering around that particular range. So let's just observe how this algorithm will monitor our positions. So you can see we are approaching towards the target value. So automatically the algo will keep the target order. You can see it has changed the target order, but it was not a strong move. So it has again kept the stop loss. So now you can see the algo is monitoring everything for you, whether it is stop loss, whether it is target, it is monitoring each and every move of the market. But what happens as a trader is, whenever we see some small profit or whenever we see some small loss, we try to modify or we try to change the system. This is one of the biggest mistake what people do in trading for intraday. So in this particular trade, you can observe, even though the Bank Nifty is consolidating, but it is moving in our favor. So now we can see the Bank Nifty is creating new low, and you can see the premium of 43,100 has hit our target. So even though it's not reflected on the chart, you can see the algo has already booked the profit. So you can see how fast the system is. So let me just reload and show you. So you can see here that it has booked the target of 20% of the premium what we have kept in the algorithm. So you can see this is the power of system trading. So we just observed how emotions will tend to change our trading decisions while trading manually. But through systems, you can see the trades here. It has done systematically. It has booked close to 1,000 rupees for only one lot. So I hope you got to know about how the ORB strategy works in the real time. And for all the users who have already bought the system, I would request you follow one particular system, whether it is breakout strategy of 5 minutes, whether it is breakout strategy of 10 minutes, or it's a reversal strategy of 10 minutes, whether it is for Nifty or whether it's for Bank Nifty. You need to follow one particular system for a period of 15 to 20 days, right? And I thank you everyone for being a part of Trade Psychology community and being interactive in our algo group. We will be coming up with much more case studies and demonstrations to help you become a profitable trader by using algorithms. Thank you and have a great day.